I see agents all the time that are like, I'm going to buy 10 leads and I'm going to see how they go.
And I'm not going to reinvest until I find out how those 10 work.
You're either hitting the Super Bowl or you're homeless. There's no in between, right? Like if you sell 5 or 6 of those 10, you feel like you just found the gold nugget. Like you hit the Super Bowl, right?
Yeah.
If you sell 1 or 0, or you have a charge back on one, it's the worst lead you ever seen in your life. So you have to give them time to figure it out.
You have to give them enough. You have to give enough.
You have to have enough,
and you have to give them time.
That is so important. And at the end of the day, all leads work if you work all leads.
We got a crazy good session for you today at the Life Insurance Academy podcast. What are the best leads in the industry? Are you in the life insurance space trying to figure out what leads are best? We've been in this business now for 10 plus years. We've seen all the trends come and go. People have been asking us, we get hit up all the time. What about leads? What about the leads? Where do you get your leads? What type of leads? We're in studio today. Zach and I are going to be breaking down life insurance sales and the best leads. And hopefully you're going to learn a few things to blow up your business. Zach, what's going on in the lead space, man? For life insurance sales, it's gone nuts.
Do you remember the pink leads?
The pink cards?
The yellow leads?
Yes.
The blue leads?
I do.
And the craziest thing is, you're right. I mean, life insurance industry has changed so much.
He's talking about direct mail leads, by the way, when he says the pink leads.
Yeah, they literally are pink. They've changed so much, even since I've been in the field and since I've been out there. And I remember we would have never even dreamed of a digital lead at that point in time. And now there's so many different options. There's so many different variations. There's so many different lead cards in every single category. It's kind of exciting, but it can leave a new agent confused on, well, what is the best lead?
There's also a ton of changes going on in the market. Like, what the heck happened to mortgage protection sales, right? Maybe you're a part of a mortgage protection primary, IMO, and that was your primary deal, and nobody's buying houses. That's not really true. People are still buying houses, but not at the rate they were 4 years ago when interest rates were 3%.
Right.
Now they're 8.5%, 9%, 10%. People are trying to figure out how to navigate that. We got people leaving the mortgage business, coming into the life insurance business. So if they're leaving that business to come here, clearly there's not as many houses being sold. So what happened to those leads? Where did all those agents go? Where do they transition to? People are trying to find their way. Man, it's just volatile right now. Volatile, but also where there's volatility, there's often opportunity.
Always.
So we're going to be talking about all that stuff. Are you still wanting to do direct mail cards? Because those pink ones, I remember the caption on the top said, supplement your government benefit of $255.
Yep.
That was the headline. And then there was fine print and fill out information if you're interested on how to add additional coverage to your government benefit of $255 for burial costs.
Absolutely.
I mean, some of those didn't even say anything about life insurance, but I worked some of those when I first got started.
Yeah.
Crazy.
I think it's important because we're in today's age when it comes to leads, and there's so many new people coming into this. And the funny thing is it's all about perspective, and to where one agent can literally disagree or not be the world's biggest fan of a lead, and then another person comes along working the same variation of lead, the same type of lead, the same demographics of a lead, and it's the best thing in the world.
Yeah.
And it kind of all comes to what it was, but not only has the market changed when it comes to mortgage protection, but one thing has been a huge factor in the last couple years that I've seen is the rising cost of inflation that's just been a result of the economy and what's been happening since COVID, and it's kind of caught up to any of the direct mail lead programs, which also played a factor into it. Simply raising the cost of stamps. I mean, that has increased so many different times, which again raises all the cost of being actually to mail out direct mail leads.
Correct.
And it's all to perspective. And what I mean by that is, Roger, I remember back in the day, and you
when you say back in the day, you make
crazy.
yourself sound old. Bro, you're still only 30.
Smoke my pipe. But I
How
remember.
old is he? I've been selling life insurance since I was 6.
Yeah, that seems that way. But that's a testament to how fast this industry changes, right?
Here, you want a Pall Mall?
Not in the studio. But looking at the direct mail, golly, he's going to go from level to graded during this podcast.
Oh my gosh.
But the leads, they used to be roughly, I think the cheapest I remember a qualified direct mail lead was like $20, $21, somewhere in that range.
When I started, they were like right around $20 a lead.
Yeah.
Yeah.
And
people thought that was expensive then.
yeah, now to get a good direct mail lead in the final expense market, that is on average, because we've done leads in literally every state, but on average, you're going to be searching somewhere around $45, $42 to $45. In some areas, there are some,
And that's your final expense.
And that's for final expense leads.
What about mortgage protection right now?
Mortgage protection, it's up quite a bit, but the issue isn't necessarily the cost of the leads. It's the amount of data records available to mail is really the biggest issue in the mortgage protection.
That drives the cost of the lead up because there's not as many people returning.
It does, but you're also not mailing the same number. So the return rate is still about the same. It's just smaller pools.
Correct. Well, and if an agent was licensed in 2-3 states and was working before, now you pretty much got to be licensed in 20 states to make that work.
Exactly. And to speak on that direct mail part of mortgage protection, that the biggest issue there is like nobody's really refinancing because the rate you probably have is probably
better than the one that's available
that
now.
you could get.
Yeah.
So that number has drastically decreased. The people that are typically buying new homes now or selling and buying, they're probably financing a very low amount, if not cash flowing the whole thing. But there are people still buying homes. But when the number of average mortgage records available decreases, that necessarily means the number of leads that you can get in that area decreases. So like you said, you have to get other states.
A massive drop.
Yeah, and the thing is you can't throughout the U.S., there's only so many leads available, which is different than final expense, which is different than a general life lead that can be online because these are people, right?
Why is it different than final expense?
Well, simply the way you generate the records.
mortgage leads, final expense leads. Because you got some people out there, and if you're with an IMO that is primarily selling mortgage protection, and in 2019, 2020, 2021, 2022, you were like flying, and then around 2022 when interest rates started cranking up, it just got nuts. And then you saw a drop off, but people didn't really feel the drop off until it's like on them. And now there's now what do I do? Now I can't make it. Same type of leads are not available. So you got all these lead vendor companies that are trying to get creative on how to create data. And you got these mortgage protection agents. They don't know anything about final expense. They don't even know how to source a different type of lead because they were brought into maybe you were brought into the industry and that's what you were told was going to be evergreen. The funny thing is, here's the funny thing. And I was having a conversation with someone about this the other day. It's kind of frustrating. And it just makes you go, what were they thinking? There's these large groups, and we won't name them, large IMOs. They came through the first mortgage market crash in 2008, 2009, 2010, 2011, when the mortgage market crashed, when Lehman Brothers, all these banks went, bust, all these subprime mortgages, and everybody was getting out of that mortgage business. And the mortgage protection insurance sales business dried up, and everybody migrated to final expense. Right? And a lot of companies shut their doors as a result of that. People were trying to survive. Agents were trying to survive. There was a ton of attrition in the business at that point, and agents were trying to figure out how to survive. And then they're going from a high net worth individual, people, average household income of 80, 100, 150, 200,000 plus in a lot of cases, selling insurance to those people, to then trying to figure out how to sell insurance to people who make $1,100 a month in their Social Security as a senior. And a lot of people couldn't make that transition. Mentally, they just struggled with it. They didn't know how to do it. So there was a big implosion, and then the people who did survive kind of migrated over. But a lot of these IMOs, as soon as the mortgage market came back, shifted all their focus right back to mortgage again, and didn't actually diversify or safeguard at all. And then we come through another big wave and all their agents are just reeling, going, and the leadership's going, I wonder what happened.
Yeah.
Well, dude, all you got to do is look back at history to know what happened.
Yeah.
Like, are you with a company that's diversified, or are you with an organization that can at least direct you on lead options, or is the group you're with only doing one thing? So we wanted to like pull back the curtains or the mask and kind of like let people take a look inside. I don't know what we're pulling back here, Adam, but maybe you can pull back and so they can see
it's
inside.
The Wizard of Oz.
Under the hood, lift up the hood.
Don't look at the man behind the curtain.
The man behind it, whatever, and say, let's talk about some of these issues, because agents are out there just trying to figure out what the heck happened, what's going on. I was told this, it's not what it was. How do I hear about all these people making so much money and now they're not even in the business anymore? What happened? So like, what's going on in the lead business?
Well, there's a few different things in my opinion. One's price, one's is availability. The other one is innovation. And if you can adjust those, and by the way, I want us to say this, the top people in MP are still the top people in MP.
Yeah.
And there's a reason behind that.
Yeah, I would say so.
And we talk about price for the first thing. Yes, the price goes up. That's life. Everything goes up. Inflation goes up. Your milk goes up. Gas goes up. The cost of that hoodie goes up.
Eggs.
Actually, they stayed the same price in the LIA store. But
They did. By the way.
Everything
if you
continues
want one,
to go
you can
up.
get one. LIA store, go there.
But the thing that I don't understand as an agent is some of the agents that have been in the business for a while, they're more sensitive to the price because they remember what it used to cost.
Yeah. Mm-hmm.
And the reason that the price doesn't matter for me is because it's not an expense, it's actually an investment. And these same agents, the same people, are the ones that are 5Xing their investment when they run the leads anyways. But as soon as the price goes up $1 or, they raise the cost of the stamps or whatever it is, they start to order less to stay at the same lead spend budget.
Yeah, investment.
Yeah. And the hard part is if you're 2Xing, right? Or 3 or 4 or 5, I mean, obviously it's more obvious the higher you go. Why would it matter if that lead cost went up? Because leads are opportunities. It's the lifeblood of your industry. It's what you need to be successful, especially if you're a veteran agent, where you have new agents coming in and they see today's cost and it's no big deal because that's what they expect. That's what they've experienced. And you're able to move through with that. So price to me should not matter because I think you just need to change your mindset. And can you speak on that investment versus an expense kind of for a second?
Yeah, a lot of people, I did a video on this and maybe we can link it in the episode, in this episode here. I think it's called How to Invest $1,500 One Time and Make $240,000 every year for the rest of your life. Mm-hmm. And that video just kind of breaks down the idea that you're actually in business for yourself. And every business has to have a marketing investment to create opportunities.
Correct.
The marketing is either going to be your sweat equity and your time or your dollars. And when you first get started, a lot of people, unfortunately, it has to be their sweat equity and their time. So there's a warm market. They're doing whatever they can to get the thing up and running and cash flowed. But as soon as you have some cash flow coming in, you need to invest marketing so you can create lead opportunities. In the insurance space, that's in lead generation. Mm-hmm. Now, whether you're doing that today digitally, using a CRM, using automations. Maybe you've done direct mail stuff in the past. Maybe you're doing some hybrid form of direct mail with an IVR, with a integrated voice response, that type of interactive voice response, and you're using different technologies to create leads. If you're not investing in your business regularly to create those opportunities, you're actually starving the lifeblood of your business. It's like trying to grow a garden and never watering it, right? Like you've got to put fertilizer on it. You've got to water it. It's just a part of the deal in order for you to grow a business. A car with no gas going back in it is only going to go so far. So
yeah, and the simple example of that video is, and I'm just going to do simple math here. Let's say it costs $1,500 for your leads. Okay, so you take the $1,500, you put it in leads. You put it in the lead machine. We'll call it cha-ching. And then all of a sudden, leads come out.
You put it in the business machine.
Yeah, the business machine.
Let's call it the business machine.
Business machine. The leads come out. You just simply work them. Follow our principal script. You work them, and let's say you generate $5,000. Okay? Now, of that $5,000, look, that's your original $1,500 still right there. Let me put that back in my pocket, okay? And then $3,500 goes to my other pocket. Good job. You did great. Now, guess what? The next week rolls around, I pull that same $1,500, I put it back into the business machine. gives me a batch of leads. I take it over here. I turn it in to $5,000, right? I put another $3,500 in my pocket, and I still have that same $1,500.
And you keep putting it back in the business
Next
machine.
week, I put it right back in the business machine.
Zach, I don't even like putting it in my pocket. I like just pulling it out as fast as I can and getting it back in the business machine as fast as I can, because
Correct.
that is the life flow of your business.
But that's kind of a, if you will, trying to paint a mental picture for you guys of why it's that same money, but you have to spend a little bit of money to make money. So it is an investment. It is an opportunity. And let's say, you're making that $3,500 in your or more, and you're grinding, you're building your business, you're doing the right things, you're following everything it is to be successful, you're a brand new agent. And what happens if it turns to $1,600 that you have to put in? You put $1,600 in the business machine, you pull out the $5,000, you still do good. That's the whole point.
Correct.
So don't get too
So you're making
caught up.
$3,400 instead of $35,000.
Correct.
Now, by the way, guys, after your business expenses on that $3,400, you're probably going to have some other business expenses. Then after that, you have to account for your taxes.
Yep.
You got to pay your taxes. You can't run away from that, because you can get yourself in trouble that way too. So make sure you're allocating 25% of your net revenue after all of your expenses towards taxes, just in a separate account, and get on a program where you're paying that at least quarterly. I mean, there's a side tip that had nothing to do with leads, but I just want to throw that in there as a caveat. We always want to be transparent about what's necessary to succeed.
Absolutely. The other part I wanted to talk about was like the innovation part, right? I mean, the cool thing is to be able to see really the innovation of this industry when it comes to leads and getting in front of prospects has changed so much. I remember the first time we started running digital leads. I don't remember how long ago it was. It was a pretty long time ago.
2020, probably.
It was the very first set, and I remember going out and approaching the door the first time ever on some digital leads, only working direct mail in the past.
It was probably 2019, actually.
It was early on. It was early on. And to see how they've changed, but not just the lead has changed, but since COVID, there's been a distinct difference with our clients that we serve as far as their response to something digitally or through a phone call or electronic, where before they weren't as receptive to it. I think that has really evolved. And I tell you one thing that's been really cool that we've been able to assist with on the mortgage protection side is, and again, just to recap why it's dried up, not many people are refinancing, not many people are getting mortgages, but the top MP agents are still top MP agents because they're not running and chasing, the other opportunities here. But what they're able to do is they're able to just expand their territory, so they're getting the same number of leads in. And one thing that we have done to help boost some responses for agents that are running MP was to develop almost a hybrid lead. And this is through an IVR system to where it is still a direct mail piece because we're actually mailing real mortgage records. So they're getting it typically on a first-class postcard that gets to their home in roughly 2 days. And it has their information on it with their mortgage ID and all the anchors that we need. But instead of them hand filling out on Respondent, which you have to have a return label, return stamp, return envelope, that increases the cost of the lead.
And the time.
For responses, correct. They've been able to actually dial in to an IVR system where they can actually speak to a voice that's a professional voice recording of a real person, not a robot. Enter their mortgage ID, has information all about their loan, all about their mortgage, and they can then move through and be able to speak with an agent. That has absolutely changed the opportunity when it comes to mortgage protection because the response times where traditional direct mail could have been 3.5 weeks, it's really taken it down to about a week to a week and a half, tops. And the cool thing about that is an agent's able to respond back to them super fast when the lead is super hot. And a lot more people are responding that way because the ease of responding versus hand filling it out, licking it, sticking it, putting it in the mailbox and doing all of that. So that's been really cool as well.
And that's in the mortgage space.
Yep.
And so that's been an adaptation with technology and the ability now to be able to sell over the phone. Like it's advanced things and progressed things quite a bit. And now, of course, there's a lot of CRM development as well.
Yeah, it's really cool.
So what we're seeing with some innovation stuff that is cool is there's a lot of companies out there that will allow you to work directly with them using a CRM, and leads flow directly into that CRM through marketing campaigns. And now, of course, with some of the new regulations that are coming down the pipe, it's ideal if you have those designed exclusively for you, and it's not just coming out of a big bucket, because there's probably going to be some changes that agents need to be aware of that they need to know. But those leads flow into the system, and you have the ability to call them, but also those through platforms like Go High Level and others. There's going to be opportunities for you not to just call the leads, but actually nurture the leads.
Yeah.
So lead nurturing technology, where an email can get sent to the lead, a text can get sent to the lead. If you can't get a hold of them, they can send a reminder text. You know, they can auto book an appointment oftentimes on a schedule through a link. And then they get reminders through your automations and CRM about the appointment.
Yep.
So it's constantly reminding them, and to literally fill up your pipeline. So with technology now, man, it's come a long way from where we had those pink cards and we can only show up at the door, to now having a multiple. So while there's volatility, there's opportunity. And I want to encourage agents that are new, that you might be listening and you're looking for what are the best leads, right? Everybody wants to know what the best leads are. The best leads are the ones that you can get on a consistent basis. Right. And so stop trying to always figure out what the best lead is, and get the ones that you can get consistently, and just go to work and work the numbers. But technologies come into play, CRMs, an adaptation to final expense. There's some organizations out there that focus on veteran leads, you know, marketing specifically to veterans with a marketing niche. And so you'll find different ways to market to different groups of people, and then agents can focus on that and get good at that.
Yeah, I want to speak to the quality of the lead as well, because a lot of new agents, I think some of the lingo that's out there, whether you're hearing an A lead, a B lead, or primary lead, or a gold lead. I mean, there's so many names out there for leads. But I do want to let you guys know that there is such thing as higher quality, or I like to call them higher buyer intent, versus lower quality or lower buyer intent. Again, it doesn't make any lead better than the other. It's all leads work if you work all leads. I've always believed that. I still believe that to this day. But it's also, we have to point out that agents have different styles when it comes to their sales approach. Some people are more of a volume style salesperson, to where they are going through checking interest. They're trying to get people on the phone. The ones that have interest, they go, ha, and then they walk through their whole script.
Is that what they do? Ha. Is that what they say?
I think they mute the phone and do it. But
that'd be fun.
But they're going through those, and they understand that this is a volume play. They understand that they don't want to waste their time. They don't want to waste the prospect's time, and then they're moving through. Well, that's great, and you can sell a lot of insurance on that.
And those are typically more experienced agents too.
They typically are.
Who are not afraid of the investment.
That's exactly right.
So their lead spend is generally higher.
Their lead spend's higher, but they're also typically buying a lower buyer intent lead, because at the end of the day, people are people, and everybody has a need. Everybody has a vulnerability, whether they're aware of it right now or not. They all have families. They're all going to pass away, and there's all some sort of risk, and their families will be affected some way, positive or negative, whether they have a policy or don't have a policy. And experienced agents know that. So they're saying, well, a lead is a lead, right? So they're going to have a lower buyer intent lead, but a large number of them. And then they have systems in place to just move through those. And they're almost their own filter. They're almost filtering their leads and working their leads. Well, on the other side of that, there's agents that maybe don't have the self-discipline. Maybe they want higher quality or higher buyer intent leads, and they want to have less, call them sits or presentations with an actual prospect. So they will spend more money on leads actually get a lower number, but they're higher quality, higher buyer intent. And then they're going to take their times working that same batch over and over again to get as much as they can out of it. Both ways you can be successful, but you have to know your style, you have to know your lead source, and you have to know the activity and mindset that goes along with whichever style that you use. Typically, you see a lot of that when it comes to face-to-face, people getting the higher buyer intent lead, for the simple reason, if you're spending time commuting or driving or sitting with families, you would like to eliminate that, and everybody you go see, you want to be able to sit with and sell.
Has a good potential to be be an applicant. Yeah.
If you're on the phone, typically more people lean towards the volume game because they need opportunities to call, and they know they will find them inside of it. My advice, if you are going on the phone side, is, try a mix. Try a couple different things, mix them in together, because then you're able to kind of find your feel around, see what you want, see what you like. And one thing that you'll learn, and this is the whole point of that mix, that it really doesn't matter. It really doesn't matter. But so many agents, especially new agents, are caught in their heads. I need to buy only these ones, or I can only buy these ones, or I wasn't successful because I got the cheap ones and Roger gets the medium ones. And it doesn't matter. It's how you view them.
Yeah, you're going to run across all kinds of opportunities. So out there in the space, you might say, well, what type of leads are there? There's still traditional direct mail leads, believe it or not, and you can actually do those. They're a little higher intent, a little harder to get. But there's some people that still call them like the king of leads because of the intent of how high the intent was. I mean, someone is physically filling it out, putting their information on it, and putting it back in the mail, waiting for a response.
Correct.
Right? So that's a pretty high intent lead. It's very easy just to click on something online saying, would you be interested in learning more about $50,000 of instant issue coverage with no medical exam? Click yes, submit, autofill, submit, gone. I even forgot I did it tomorrow. Right, lower intent. You see what I'm saying? So
Right.
Lower intent, higher intent, but both are lead options. So there's digital leads through Google. There's obviously Facebook leads through social media marketing. There are specific targeted leads and niches through both of those platforms as well. Then there's
Some video leads. There's some live transfers.
YouTube leads. You can get live transfers. So you've got a call center actually calling into a database, and when they get people interested, they can direct transfer that call to you of somebody who's interested. That's generally a higher intent, higher quality, and a higher cost lead. And you've got to be sitting somewhere stationary to be ready to receive those when they come in. So that's an interesting little niche to navigate as well. Because some people think, well, I'm just going to sit here all day, and as soon as I hang up, there's going to be another one ready, and it just doesn't work like that.
Yeah.
So there's some hoops to navigate when it comes to that as well. And then there's other options where it's a lot of digital lead gen coming into a pipeline with nurturing, text automation, email automation. You're dialing, but you're using multiple ways to fill your calendar with opportunities.
Right.
Even with that, there's going to be an attrition rate on the number of set appointments versus the people that show up. So you might have 8 appointments, but even in that scenario, it might only be 4 to 6 that show up. And so you're up, but again, it's about filling your pipeline with opportunities to have conversations with somebody that express some form of interest about insurance of some type. There's some of the big shops out there that will hone in on one type of lead. And unfortunately, what happens in those scenarios is when something goes wrong with that market, those agents are like reeling because they've never diversified. They've never tried anything. I think some of the most resilient agents that we see in our space is agents that, because how many times, Zach, have you heard someone say, oh, I love that company. I love this company. I really like this company. And then we talk to them 90 days later and they said, man, it seemed like the opportunities dried up with that company. I've shifted over here now. And that company's no longer in my top 3. And then there's another company. And so there's companies out there trying to generate leads digitally, and based on how many people are in the market, based on market shifts, trends, there's all kinds of little variables. I think the key for new people is to make sure that they are with an organization that provides a variety of options that they can learn from and shadow and see what others are doing. and not get so stuck on something that's working really well. There's something about working niches for sure, because you can really get good at it. But the minute something happens to that market, like the mortgage market, you get agents that are reeling.
Yeah.
So,
and one thing that I want all our listeners to know is you have to give a lead time. And what I mean by that is every lead is slightly different. The clients aren't different. Their vulnerabilities aren't different, but how you navigate through that that beginning of that relationship can be different. You have to give a lead an opportunity. And what I mean is, if you're going to try a new lead source out, if you're going to try a new option for you, give it everything you got, but give it a couple different orders, a couple different batches of leads. Give it a true effort so you know what you're doing over the next 2 or 3 weeks, maybe a full month. Have some success on it, have some failures on it, figure it out, get that rust off, and then make a determination. I see too many agents that try a lead and like there may be a recommended spend, and ask that question: how much do you recommend to have a really good return on investment for this lead? As far as, it could be a monthly budget, it could be a number of leads, but that's a question you have to ask, because if you do not, I see agents all the time that are like, I'm going to buy 10 leads and I'm going to see how they go.
and I'm not going to reinvest until I find out how those 10 work.
You're either hitting the Super Bowl or you're homeless. There's no in between, right? Like if you sell 5 or 6 of those 10, you feel like you just found the gold nugget. Like you hit the Super Bowl, right?
Yeah.
If you sell 1 or 0, or you have a chargeback on one, it's the worst lead you ever seen in your life. So you have to give them time to figure it out.
You have to give them enough. You have to give enough. You have to have enough, and you have to give them time.
That is so important. And at the end of the day, all leads work if you work all leads. It's never the lead's fault. It's never the lead's fault. I promise you that. And if you think that, you're going to be chasing them forever and you'll never find them.
We just did an episode not too long ago with Kevin Montz, a young guy who moved out here from California. You can go back and watch that episode right here. Throw that one up there as well. And talked about how he tripled or quadrupled his earnings, tripled his earnings in just 30 days with one thing. And all he did was start tracking his numbers, and he just increased his output of dials. And he increased his output, obviously, with dials, contact ratio. That increased his presentations. That increased his closes. And he literally went from depositing $6,000 one month to almost $17,000 the next month.
And the coolest thing about that story,
and all he did was volume. All he did was increase his activity.
And from talking to him, the coolest thing is he said, I'm still not any good. My closing ratio is exactly the same, but he tripled his earnings. And that's the whole idea.
But he also tripled his lead investment.
Exactly.
Yeah, so he tripled his lead investment, and he tripled his, but his earnings went, I mean, if you go, think about it, if you were spending $1,500 and then you moved it up to $4,500, tripling your lead investment.
But Roger, his rent doesn't triple.
No. And you went from $6,000 in the one month to almost $17,000 in the next month. Like, there's a big difference. There's $11,000 there.
Exactly.
And so, you might have had $4,500 in spend, but you made $11,000. I mean, it's $7,000 in net take home.
And that's the point, right?
And he's still just learning. I mean, he's getting things up and running, and now people are trying to figure out what he's doing. That's a secret sauce. And really all it is more of the same.
Invest in your business and go to work.
Yeah, invest in his business and be consistent and show up and go after it every day. So, is there volatility in the market? Yes. Is there volatility in mortgage protection? 100%. One of the most stable markets, seniors, final expense, Medicare. Will there always be opportunities for retirement planning and annuities? Yes, in pretty much every market, but primarily, and again, in the senior market. Another final piece that I want to mention before we finish this call, and we don't talk about it enough, is if you take care of your clients and you serve them their interests and what they really need, there will be other things that you can serve them with. So if you do have a health license, maybe they do need Medicare help. If you got support with retirement planning or retirement protection, there's generally some annuity conversations and opportunities. People are literally losing money right now in the markets, and you can help protect seniors, retirement plans and lock that up and get paid for that as well. And every time you help a client with more than one product, it increases your persistency tremendously. It also opens doors in your client's mind. Not only can I use this help, but I think you should talk to my sister My sister's situation is different, but with everything you just talked to me about, she needs to talk to you too. Mm-hmm. And there's this thing that really, really works, but you got to implement it, and you've got to ask. So if you get a client that's happy with you, for those of you who are not asking for a referral, or who else in their family that they love and care about that could possibly get some information from you, whether they buy or not, that's up to them, but you can get some information to them. If you're not doing that, you're leaving money on the table, and there's a bunch of leads that you are leaving unturned, and those are free leads. Those are free leads because those come from happy clients. So make clients happy, serve them well, and ask, who else can I serve? And that will turn into be one of your biggest lead sources yet, and some of your most profitable. So hope that helps. Make sure you like this video. Make sure you comment on this video. If you got comments or questions about leads, and we can point you to tons of different vendors. We can point you to things that work. We can point you to agents that are making great things happen. Also subscribe to the channel. Guys, we're busting through the roof with this channel. We appreciate the love so much. You guys are sharing the content. We love it. We love it when you share the videos, and the feedback we're getting right now is tremendous. The channel is growing at a rapid rate. Big shout out to Adam Steffen on great production over there. He's doing a fantastic job. We're hitting new milestones.
If there's any topics that you guys want to cover that we haven't covered yet, or something, a question that's burning inside of you, or I'm struggling with this, or how do I do this, or what would your all's advice be on this, shoot us a message. Let us know. We would love to share it on the podcast, because somebody else probably has that same question or concern.
Yeah. And if you're a consistent high producer in the business, and you like this content, and maybe you'd like to be on this channel with us, we'd like to hear from you, because maybe people need to hear your story and how you're winning. And maybe the one thing that you're doing can help so many other people, because that's what we're all about here at the Life Insurance Academy, is helping people win in the best industry on the planet, in my opinion. So hope this episode helps. We'll see you on the next one. Thanks for watching the Life Insurance Academy podcast.